Hello friends, we'll be discussing certain details or rather an illustration where it will be from the point of view of lessee as to royalty accounts and how they are supposed to be solved out. So now that we know the journal entries of both lessee and lessor, or rather the journal entries that are supposed to be passed in the books of lessee and lessor, we understand with the terminologies we have certain illustrations to solve here. So let's figure out what is the illustration and how we are supposed to solve this. So right now, what we'll be doing is that we'll be going ahead with the problematic illustration, and this will be in terms of, or rather from the perspective of a lessee itself, nothing about lessor right now. So we've mentioned on the question here for your reference. Let's read it out. So India Coal Limited got a lease of colliery at the rate of 5 per ton. And this was on the basis of the coal raised. That means India Coal Limited is the lessee here who has got certain lease from the lessor at the rate of 5 per ton here. The minimum rent decided was 2 lakh per annum. The tenant, that means India Coal Limited, had the right of recouping the short workings for the first 4 years itself and nothing after that. The output in the last 4 years was mentioned as follows. For the first year, the output per ton was 18,000 tons was the output. For second year, it was 26,000. For third year, it was 50,000. For fourth year, it was 60,000. And for fifth year, it was 1 lakh ton. Now, we are required to prepare the journal entries and all the ledger accounts in the books of lessee, that means India Coal Limited. So let's figure out how the working will go ahead. So we have prepared the format. The first thing that we are doing is computation of royalty, minimum rent and short working. These are the three things that we first need to find out, and on basis of that we'll be able to figure out how much is the short working computation that needs to be done, or rather how much is the recoupment that needs to be done. So let's figure out this working first. So we have mentioned the quantities in ton first for the first 5 years. Now we'll be mentioning the rate per ton, which is constant, that is 5. Now when it comes to royalty, that means the amount, or rather the tons multiplied by rate per ton will be done, and that will give you the royalty amount here. That means for the first year, if 18,000 tons production was done and royalty is 5 per ton, that means 18,000 into 5 will give you the royalty on that many tons. So now the next thing that we have figured out, or that we need to figure it out, is after royalty we'll have to put down the minimum rent. Now minimum rent was fixed, that is 2 lakh per year. So let's mention that. Now that is the minimum rent. Now the short working will be where the minimum rent is more as compared to the actual royalty. So in between all those figures, there are only first two figures that can say that where minimum rent is more than actual royalty here. So let's figure out how much is the difference there. So the short working has been figured out. For the first year, the short working is 1,10,000, and next year the short working is 70,000. That means actual royalty was earned less as compared to the minimum rent. Hence, this is the short working. Now this has to be adjusted, and as you say, that short working was allowed only for the first 4 years and nothing after that. Hence, is royalty, or rather this short working that has been computed, is admissible. Now let's go on to the next computation of our question here. So the next item that we have to prepare is the computation of short workings, transfers to P&L and the recoupment. Now let's start with that. So to understand this format, we have prepared this format in a specific manner. The first column is year, second column is recoupment, third column is short working carried forward, fourth column will be transfer to P&L, and the fifth column will be the actual payment or payment to landlord. Now, the payment that is going to landlord is 2 lakh by default every month, or rather every year. However, before you reach to that conclusion, let's start with the first year. That means recoupment in the first year. Recoupment can be done only if there is certain adjustment. That means if the actual royalty is over and above the minimum rent, only from that year recoupment can be done. So for the first 2 years, there is no recoupment that can be done there. Hence, it will be dash for the first 2 years. Now, the short workings that are carried forward for the first year, the short working was 1,10,000. So there is nothing that is transferred to the P&L, hence dash. And the payment that was made to the landlord refers to only 2 lakh because actual royalty or minimum rent, whichever is higher, will be taken by the landlord. So we made a payment of 2 lakh to the landlord in the first year. Now in the second year, again recoupment is not possible because here again the actual royalty is less as compared to the minimum rent. Now the next working or rather the shortcoming that is supposed to be adjusted, short working that is supposed to be adjusted is previous year's 1,10,000 plus second year 70,000 was the fresh one. So that has to be added to previous year and that will be the new balance. That means 1,80,000 is supposed to be adjusted now. Again, there is nothing that is transferred to P&L, hence dash for the second year. And the payment that you have made for the second year stands to the total 2 lakh rupees. Now, let's come on to the third year. Now, the adjustment that can be done, if you see third year's, the total actual royalty, it is 2,50,000. That means 2,50,000 is the actual royalty, out of which 2 lakh is anyway going to the landlord. So the balance that is left is 50,000. Only that can be adjusted against the shortcoming. So what we have done is that 2,50,000 what we have received, out of that 2 lakh has gone to the landlord. 50,000 whatever was left, that will be subtracted from the balance of short working, which is currently 1,80,000. So out of 1,80,000, if you remove 50,000, that will be the current balance that will be carried forward in the next year. So the recoupment that is done is only for 50,000. That means out of 1,80,000 in the second year, that is the balance, 50,000 is removed. You are still left with 1,30,000 here. Now there is nothing that can be transferred to P&L, hence dash. And the payment that is gone there is for 2 lakh rupees, so that has been mentioned. Now let's come on to the fourth year and figure out how much is the royalty there. It is 3 lakh. So out of 3 lakh, 2 lakh is anyway going to one specific person who is known as landlord. So pending is 1 lakh. That means out of 1,30,000, 1 lakh can be couped or rather recouped using that balance and 30,000 will be pending. So for the fourth year, we have 1 lakh that is available for adjustment because out of 3 lakh total royalty, 2 lakh has gone to the landlord. And after that thing, whatever balance is left, that means 1,30,000 is the total balance that was left. 1 lakh has gone out, but this is the fourth year. Now this is the trick. Recoupment is allowed only until the 4 years, not after that. That means first 4 years they can allow with the recoupment, nothing after that. So whatever balance is left after using this 1 lakh will be transferred to P&L. So 30,000 has been transferred to P&L and the balance of 2 lakh that is gone. So that means out of 3 lakh what we had, total 3 lakhs, 2 lakh went to the landlord. Out of that 1 lakh was adjusted to clear off the balance of 1,30,000 of earlier recoupment or earlier short workings. So still there was a 30,000 short working. We could have carried it forward to the next year provided there was no such clause that after 4 years there cannot be any recoupment. If this clause wasn't there, we could have carried forward into the next year and that could have been used. But right now, here as there was no other clause, hence it has been transferred to P&L and the payment that has been done to the landlord has been mentioned. Now Fifth year, let's figure out how much recoupment can be done. There is no recoupment that is required because there is no short working anymore. So as there is no short working, we have mentioned it dash. There is nothing that can be transferred to P&L because there is nothing to adjust. So the landlord will claim the amount of royalty or minimum rent. Now the minimum rent is 2 lakh. However, the royalty they have earned is 5 lakh. So whichever is higher will be taken by the landlord. Here in case it is 5 lakh. So 5 lakh will be mentioned here. So this shows the computation of short working, transfer to profit and loss account and recoupment as well. Now let's go and pass the journal entries for the first 5 years. That means all the 5 years we have to pass the journal entries here. Let's start with year 1. So we are passing the entries for year 1. We have to pass it like that for 5 years now. So let's start with the entries for year 1. So the first entry will be the royalty payable entry. The entry is short working account debit, royalty account debit to landlord account. Landlord account will have the minimum amount due, or rather the minimum rent on the account of shortcoming. That will be the difference, and royalty will have the actual royalty that is supposed to be paid. So the royalty in the first year was 90,000. That has been mentioned there. Minimum due or minimum rent was 2 lakh rupees. So the difference between them is 1 lakh 10,000. That is the short working account. So the second entry will be landlord account debit or payment to landlord account debit to bank account. This refers to the minimum due or minimum rent that is paid to the landlord. This is in respect of all the entries that is done by the lessee. Now, for year 1, this will be the third or last entry, because whatever entries or whatever shortcomings we had or whatever royalty we had to transfer it to the profit and loss account. Accordingly, we have to close this thing. So let's go ahead and figure that out how much it is. So the next entry and the last entry that we have passed for year 1 is trading account debit or profit and loss account debit or manufacturing account debit to royalty account. Amount will be the same, that is 90,000, which has been paid off. So after the payment of minimum due, we are supposed to transfer the royalty as well. So that has been also transferred here. So with this, year 1 is completed. Let's go on to year 2 now. Now for year 2, again we'll have royalty payable. We have to mention that entry. So for year 2, the royalty payable account refers to, or the transaction refers to, royalty account debit 1,30,000 that was predetermined, short falling or rather short working account debit with the balance after minimum due is subtracted from the royalty, which is 70,000, and the third account or rather the credit side will be to landlord account with 2 lakh rupees. This has been done. The next will be the payment that is done to him in year 2. Now, the second entry will be the payment that is made to the landlord. So let's pass that. So in the second entry that we have passed here, that is landlord account debit to bank, the amount is 2 lakh and the narration will be the payment that is made to the landlord, being payment made to the landlord. Now again, the year 2 entry will be closed after transfer of royalty to profit and loss account. So let's do that. This royalty will be 1,30,000. So the entry has been passed here, that is trading account debit or profit and loss account debit or manufacturing account debit to royalty account, and this account has been credited with 1,30,000 and debited with 1,30,000 itself, which is the transfer of royalty now. So we have completed year 2 entries with the transfer of royalty. Now we'll start with the year 3 entries now. Let's figure out what do we have there. So the first entry for year 3 will be when royalty is payable. So the entry that we have passed in the third year is royalty account debit with the amount of 2,50,000, out of which 2 lakh has gone for the minimum amount or minimum rent due to the landlord. That means landlord has taken 2 lakh amount. And on the credit side, we have mentioned short working because here royalty is more as compared to the short working, or rather as compared to the minimum rent. However, short working is being utilized for the other rather short workings of the previous 2 years. So that adjustment has to be done in the next few entries. Now the next entry of year 3 will be when the payment of royalty, or rather when the payment is made to the landlord. So the next entry that we have passed here is being payment made to the landlord. The amount has been mentioned there as 2 lakh rupees. Let's figure out the next entry. That means this specific transfer of royalty entry. So the next entry that has been passed here is the transfer of royalty. That means trading account debit or profit and loss account debit or manufacturing account debit to royalty account, which is worth rupees 2,50,000. Now we'll go on year 4 with the transfer entries and with the journal entries related to year 4. So the first entry will be the amount of royalty payable. Again here royalty, or rather the short working, will be on the credit side because here the royalty earned is more than the minimum amount of rent due. So the entry here is royalty account debit to landlord account to short working account, royalty account being 3 lakh rupees, short working being the difference between the minimum amount due of rent to the short working, or rather to the royalty. So 3 lakh is the royalty, minimum amount due here is 2 lakh rupees. So the difference is 1 lakh, and that is the amount of short working here. Now the next one will be the payment to the landlord. So here the entry that has been passed is landlord account debit to bank account with an amount of 2 lakh, because that is the amount that has been transferred as a minimum rent due. Now the next entry will be transfer of royalty. Once the payment of rent is done, royalty has to be transferred. Again the entry will be trading account debit or profit and loss account debit to the royalty account, which will be again 3 lakh rupees. So year 4 third entry has been passed. Now here, if you close year 4, that will be completely wrong again, because there is some adjustment that you need to be doing here. The one thing that is irrevocable or irreversible amount of the short workings, because there is 30,000 which is cannot be, or rather that 30,000 which cannot be revoked, or that cannot be reversed back, or we cannot get that amount back. Hence that entry is supposed to be passed here. So let's pass that entry, because at the end of the 4th year, after that there is nothing known as recoupment that is going to happen. Hence this entry is supposed to be passed in this year itself. So the next entry that we have passed here is profit and loss account debit to short working, that refers to the 30,000 which was irreversible, and hence it has been transferred to profit and loss account. As it is an expense or loss for us, hence profit and loss account has been debited and short working has been closed here by the amount of 30,000. So we'll mention the narration there. Now with this, year 4 entries have been completed. Let's go on to year 5 now. Now again, when it comes to year 5, there is no short working because short working has been completely done. So let's start with the amount of royalty payable. So the entry that has been passed here is royalty account debit to landlord account being amount of 5 lakh. The reason being here the royalty amount is more as compared to the minimum rent due and there is no shortcoming. Hence here the landlord will claim the actual royalty itself. Hence that is the amount that is passed. The next entry that we'll be doing is the payment of royalty. So the entry that we have passed here is landlord account debit to bank account with the amount of 5 lakh. Here we have mentioned in the narration that this is the royalty that is paid because there is no shortcoming, hence, or rather there is no short working, hence there is nothing to look after. Let's transfer this to profit and loss now. Now the last entry of year 5 will be transfer of royalty to profit and loss account. So with this entry, we have completed all the entries of all the years, that is rather year 1, 2, 3, 4 and 5. Now, we're supposed to prepare the ledger account based on these journal entries that we have passed. So, for all the 5 years, we are supposed to prepare the ledger account. Let's go ahead and prepare those ledger accounts now. So, there are 3 kinds of accounts that will be prepared in the books of lessee. That is the lessor account, the short working account and the royalty account for all the 5 years. So let's start with the lessor account first. Now when it comes to lessor account, the first 2 entries are related to lessor. That means the first entry, that is royalty account debit, shortcoming account debit to landlord account. So landlord account is basically the lessor account. So on the credit side of landlord, you will have by royalty, by shortcoming, and the next entry, that means payment made to landlord, that is landlord account debit to bank account. So on the debit side of landlord, you will have 2 bank account with a payment of royalty made there. So let's figure out that now. So the first entry, rather in this thing, when the account has been prepared, the debit side has been mentioned with 2 lakh as the rent amount that was due and paid. On the credit side, we have mentioned the short working and the royalty account. It is a self-balancing ledger, hence there is nothing to worry about. Similar to this, we'll prepare the second year now. Again, for year 2, we have prepared the same thing. That means on the debit side, we have an amount of 2 lakh. And on the credit side, we have an amount of 1,30,000 as royalty and short working as 70,000 mentioned there. Let's go on to year 3 and prepare the same thing. So for year 3 on the debit side, we mentioned to bank account as 2 lakh. Now for year 3, there was no short working. Rather, the earlier short working was getting adjusted automatically. So whatever it was just royalty here. So that has been mentioned. That means by royalty account has been credited with 2 lakh rupees. So again, it's a self-balancing ledger. Now we'll have the similar structure for year 4 and year 5 as well. Again, for year 4, we have mentioned 2 lakh as to bank account. And again, on the credit side, we'll mention by royalty account 2 lakh because that is the same amount that has been transferred. Now, the last year entry is supposed to be passed for Lessor Account. Again, here the entry will be the same. The only difference will be in the terms of amounts. Instead of 2 lakh, it will be 5 lakh. So here the Lessor Account is completed. Now we'll go on to the next account, that is short working account. Now we'll be talking about the short working account. So let's start with year 1. Now, when it comes to short working, the first few years will have only lesser because, or rather the lesser account on the debit side, because the entry that was passed here was in the first few years, royalty account debit, short working account debit to landlord account, or rather to lesser account. So on the debit side of short working, it will be to lesser, and that will be the balancing amount. Now, once this is done, to lesser account has been mentioned, that is the balancing. So on the credit side, we'll mention by balance carried down, and that will be gotten down on the next year's balance. So year 1 has been completed. Let's go on to year 2 now. Whatever balance was there in the previous year, that means on the credit side that you can see, will be brought down on the next debit side. Now again, in the second year, there was a short working for 70,000. So we have to note that down. So the total comes to 1,80,000 now, and that is carried forward in the year 3. Now that we have carried forward the balance of 1,80,000 in year 3, now in the third year, there was no short working, but the earlier short workings were getting adjusted in terms of the royalty that was coming in on the credit side. So on the credit side, we'll mention by royalty. Now, this royalty will be the first amount, that is 50,000 additional that came in. As you can see in the account, again, the debit side is higher, but the credit side will have a lower balance now. So that 1,30,000 balance has been taken forward in year 4 now. Now in year 4, we got a royalty of additional 1 lakh that has been done here or used here for clearing of this balance. So the balance left in short working account is 30,000 itself. Now this balance that has been taken forward, or rather that has been carried down, has been closed because it has been moved to profit and loss account. So I'm highlighting that in black. Hence, in short working account, there is no year 5 because in year 5 there was no short working at all. Everything was allowed only until the first 4 years. Now, let's go and prepare the last ledger account, that is the royalty account here. So now when it comes to royalty account, we have to use the formula, or rather the technique that we used in short working itself. Now again, royalty account was debited to landlord account. So on the debit side of royalty account, it will be to lesser account and the royalty amount. Now, whatever royalty was there was getting transferred to profit and loss account. Hence, again, it's a self-balancing ledger. Whatever royalty is being transferred will be moved to profit and loss account. So when I talk about self-balancing ledger, basically, there is nothing that is carried forward down. Year 1 is done. Let's go for year 2. Again, for year 2, the royalty was 1,30,000. So to lesser account, 1,30,000 has been mentioned. Again, on the credit side, it will be by profit and loss account 1,30,000. Now, let's come to year 3. Now for year 3, the actual royalty was 2,50,000. However, it was subdivided into two parts, 50,000 for the short working and 2,000 for the royalty payment towards Lessor. However, the whole amount was moved to profit and loss account. So on the credit side, it will still be the same by profit and loss account. Now we have year 4. So for year 4 also we have completed 3 lakh rupees in this specific segment. Now let's go on to year 5. That is the last year. So for year 5 also we have mentioned the amount, that is to Lessor account 5 lakhs and by profit and loss account 5 lakh. So with this we have completed all the 3 ledger accounts that are required for this illustration. And I hope with all these 3 ledger accounts you are able to understand how the journal entries are taken and how they are transferred in here with the explanation that has been given on this specific problem. Make sure whenever such explanation comes in or whenever such transactions are supposed to be done, please mark your entries in a correct manner, or rather in an organized, aligned manner, which will make it easy for you to transfer those entries to ledger balances. So this is what we had in this video for you. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.